What is going on, ladies and gentlemen? Today we are going to be talking about how to get maximum gain on a credit spread. I don't have any credit spreads for an example, but I can show you one I played today and give you kind of example of how I went about it and how you get the maximum gain on it. So we bought an HD credit spread. We bought the 232 and we sold the 230, and the stock was trading at about 234, 235. So the contract we sold was pretty far in the money. We had assignment risk, and that's why we got such a big credit. We got about a $215 credit, so our risk was about $35. But essentially what this call credit spread is saying is that HD has to go below 230 in order for us to get this $250 credit we received and not lose our $35 of risk. So we may have received $215 credit up front, but we don't get that until we either sell the contract or it expires. So HD expired about 232. We did not get the $215 in this case. We only made $15 plus the risk back, assuming you don't have Robinhood. If you have Robinhood, it sells your contract like an hour or like 45 minutes before expiration. So you got to be aware of that and try to sell your contracts at the best time. I messed that up because I had this contract and it went down to almost 230, and I could have sold for about $100 profit, maybe even more. But I got greedy, and then the share price just shot right back up, and I only made about $45, but I still got a profit, but I didn't get max gain because this contract didn't go below $230, and I didn't sell it when it was at an optimal price to sell and get $100. Sometimes when you're selling a credit spread, you're not trying to get the maximum gain unless you really think you can get it. You're just trying to sell it at the optimum level where you think the stock may be bottoming, and maybe it could go below 230. That's just a risk you take when you're doing credit spreads because you never know. And the break even's such a big key factor in credit spreads because that makes it so you don't get maximum gain if it ends in between these two contracts. So in this case, our break even on this play, we got a $215 credit. So you add 215 to 230, so our break even is 232.15. So if the shares ended at 232.15, we wouldn't make any money in that case. We'd have to give all our credit back because we would have to sell the shares at 230 and we'd have to buy them at 232.15 or wherever the stock is trading. But that's the only way we can make money on a credit spread is if it goes below our break even, and the only way we can get the maximum gain is if it goes below the strike price we sold. So let's look at the put side. If I would have sold this 232.5 contract and bought the 230 contract, and say Home Depot was down here at 227.5, I would have received about the same credit, the 220 credit, whatever. So the only way I'd make money on a credit spread on the put side is if it goes below my break even on the put side. So you would do 232.5 because this is the contract you sold. You would minus it from the credit you got, so 220, let's say. Our break even would be 230.80. So in order for us to not lose our risk, Home Depot would have to come below 230.80. And then in order to get our whole $220, it would have to go above 232.5. Say it ended at 232, we would only make about $120 right here, when we probably could have sold the options contract for more closer to 200. But that's the risk you take pushing these contracts all the way to the wall. If it doesn't end above 232.5, you're only going to get the difference between your break even and the share price. You're still going to get assigned on this 232.5 on the put side, so you're going to have to buy these contracts at 232.5, and then you can hold them. Maybe the stock will go down, but if you don't have the if you don't have the money to do that, you're going to have to sell them at 232. And yeah, that's from your break even. You would only make $120, and that's pretty simple math. I just probably make it really complicated because if you don't know options that well, you don't really know what I'm saying. But if you're pretty decently well educated in options, you probably understand that. So that's how you get the maximum gain on a credit spread. If you have any questions, leave them in the comments below. I'd love to answer them. Be sure to like the video and subscribe to the channel, and be sure to check us out live. We're live Monday through Friday, market open to market close, and we'll see you guys in the next video.